Hey y'all, today, early this morning, Dave and Buster's reported their first quarter for 2022. Here we have their newsletter. We're going to go ahead and go through that. This was a record quarter, and they beat on EPS and revenue expectations for the quarter as well. It looked like analysts had taken their Q1 2019 quarter and basically assumed that they would hit those numbers again. And here they beat the revenue and the EPS, and we'll go through their highlights first, and then we'll go through their balance sheet at the bottom of this. So revenue increased 24.1% from the first quarter of 2019, which 2019 was their last year that they could really do comparables to, because 2022 they were pretty much shut down the entire year. 2021 they were still reopening, and then this quarter, I listened to the conference call and took some notes here. It looks like mid to early May, all stores were fully open, um, all hours of operation they were open, but they are still at 90% staffing of pre-COVID levels. Um, so here they're comparing revenue increased 24.1% from the first quarter of 2019. Look at that as a year-over-year number, and it was a record $451.1 million compared with $265.3 million in the first quarter last year and $363.6 million in the first quarter of 2019. So just about $1 million increase from 2019 and just about a $200 million increase from 2021. And sales increased 10.9%, same period in 2019. Net income totaled a record $67 million, or $1.35 per diluted share, which was $1.13 for the same quarter in 2019, or 40 cents last year. EBITDA, ended the quarter with $140 million in cash. And let's see. Let's see here. Debt ratio of 0.7x. This revenue was a 70% increase year over year. And then the 24.1% over 2019, as we saw. Let's see, any other good information here? Walk-in comparable store sales increased 14.7%, while special event comparable store sales declined 34.6%. These are a lot of the same numbers repeated. Let's see. The company's business has continued to strengthen through the first 5 weeks of the second quarter, during which comparable store sales increased 12.2% compared with the same period in 2019. Okay, so here we have, where was it? So comparable store sales increased 10.9% compared to 2019, and they're saying the first 5 weeks, because they were reporting this earnings report on June 7th, but technically first quarter ended 5 weeks ago, but it takes them the 5 weeks to compile the financials. So in the time that the second quarter has begun to reporting first quarter, that 5 weeks they're mentioning here, comparable store sales increased 12.2%. So they're already alluding to second quarter being better than this quarter. And the walk-in comparable store sales increased 17.8% compared to, up here they say 14.7%. and special event comparable store sales declined 27.9% compared to 34.6% up here. So it's already looking very, very good for Q2. And some of the notes I have here written down from the the call, the earnings call. They said they began the quarter, the average revenue per store was 180K, and then the end of the quarter, the average revenue per store was 220,000. And so that 220,000 beginning second quarter, and who knows, at that same rate of change, maybe they in the quarter average 240,000 per store. But we'll see. Okay, this is all traditional verbiage they have to put. Okay, here we go. So here we're comparing. Actually, that's interesting. So this is just going to be the total assets. So and this is in thousands. So 2.4 billion in total assets. 2.4 billion. That's the same number. Interesting. Let's see. So, okay, they're going to compare this same quarter across 2019. They're going to skip 2020 because everything was shut down. 2021 here and 2022 here. So, total revenue, you can see this is the pretty much the last comparable quarter where they had all normal operations. 2021, some stores, most of the stores were still shut down, and 2022, all of the stores as of early May to mid-May were open. So not even the entire quarter had all stores open, and they already beat the revenue compared to 2019. Here we go. Total operating expenses. We see 305 million, 306 million compared to 352 million here. And I have notes from the conference call that they had a $5 million Eat and Play, in quotes, marketing spend in April. So that was an abnormal amount that they spent on marketing, which would go under, this would be cost of sales. Cost of sales. So, and then also they had elevated cleaning and security costs for this quarter. Operating income, we see almost double from that comparable quarter. And then the net income down here, $42 million compared to $67 million for this quarter. And here we have basically the profit margin of 11.7%, and here we have profit margin of almost 15%. And a lot of this is due to a pretty steady increase in spending towards the amusement, and away from the food and beverage. So you can see that roughly the same amount is spent on food and beverage compared to this 2019 quarter here and here. But that's representing 33.7% of the total revenue this quarter, and it was almost 41% back in 2019. And their amusement back in 2019, just about 60%, and here this quarter 66.3%. And as we saw in the previous Dave & Buster's video that we made, they have a much higher profit margin for the amusement and other revenue. And they go into detail on that in the conference call. It's just less labor, less staffing that they need to maintain the amusement side, all the arcade games and everything. You recharge your card by yourself. Like you don't really need any staff to help you So it's much more profitable to run that side of the business, and so that's why this profit margin down here is 15% compared to just about 12% 3 years ago. So, and then here we have the income per share, $1.15 per share back there in 2019, $1.38 here, and then we have shares, basic shares outstanding, 36 million and 48.5 million here. So they did, looks like between 2019 and 2021 issued quite a bit of shares, like 10, 11 million shares, and then another million shares between 2021 and 2022. So this income per share would actually be much higher had they not issued this near 12 million shares in relation to this prior year, 2019. And so, let me see, any other notes I have down here? No, that's pretty much it for the notes, and pretty much it for the quarter. So, and this is pretty much what we were seeing before the pandemic. Dave and Buster's, they really quarter over quarter, they continue to open up new stores and continue to expand, and their profit margin always expands, and so they continue to bring in more revenue. They continue to be more profitable. They're already alluding to Q2 being very strong. Here, second quarter 2022 business updates. That's already a 2% increase over the prior. Well, just about 1.3% increase over the prior quarter, being this quarter. So that's already pretty significant growth. And then in the conference call, they did allude to the Main Event deal still going forward. So that is going to be another huge boon to the business. And so this quarter was good, a record. It looked really good on the books, and every quarter beyond for this year should continue to improve. And someone did ask a question about low income customers having less discretionary income, and they said up to this point thus far they have not seen any slowdown. Even that particular demographic, they haven't seen any slowdown, and so that could reverse, and they could start doing worse if ultimately they don't have as many people coming in through the door. But at least for the next quarter, at least at this point, we see that's not the case. We continue to see increases here, so it does still seem to be pretty stable company, and their PE ratio is hitting pretty much a low side of 16 PE ratio, and a PS ratio of, what was it? I think 1.2. So those are it's still a little expensive, and that's primarily due to them issuing these shares. They would definitely be PE ratio much less than 15 had they not had to issue these shares in prior years. But with that being said, a couple more quarters like this, beating expectations and continual improvement, the PE ratio will be below that magical 15 number we always talk about here, and the PS ratio will be below the magical 1 number that we always talk about here. And I mean, even right now, it's still considered a pretty good investment, but do factor in the risk of a recession and what that can do to customers' discretionary spending. And ask any questions if you have any below, any other insights you can give. Thanks.